Hello guys, and welcome to this first ever lecture in how to actually trade. This lecture is going to cover how to make a top-down analysis the right way. And the reason I'm doing this is because I've seen a lot of videos online here and there, because I've also started, from YouTube around 8 years ago. I've tried to try different strategies, what works and what doesn't work, and I've found a good strategy that actually works, that actually pays. And I just thought of sharing this with people so that maybe I can help you somehow on your own journey, because as you may know, trading is pretty boring and pretty lonely when you get to that stage that just executing your setup again and again and again. So this is for me somehow a type of mixing it up so that I can get more value out of trading and also give more value to you guys. So why should you listen to me? Well, you can call me Denkeli first of all, and I've been trading for, as I said, around 8 years. I'm not saying that I've been profitable for 8 years, but through ups and downs, I've managed to become profitable the past 3 years, and I feel like this is now the time that I can share my knowledge, share my insights maybe, and give you some value that hopefully helps you somehow. So without further ado, let's start with this. So I trade NQ most of the time. And what I start with obviously is the monthly. And we don't spend much time there. We're not swing traders, we're day traders. So the only thing we look at the monthly for is to know where we are currently. And when we look at the monthly chart, the two most important levels for us are the previous month high and previous month low. So when we look at these two levels, you should first understand that price always has to go from point A to point B. So if we are in a bullish market, we try to find our point A, pretty low on the price levels so that we can, trade it to our point B, which would be much higher up, right? So for example, let's say if we are targeting the previous month high, that means that we want to find our entries pretty early on and to know that we already formed the monthly swing point so that we can trade to the upside, right? So let's say in this market, you can see currently we are pretty bullish. And one thing that we also could see that happened here is that we had a imbalance on the monthly, right? That we tapped into during November, and we rejected pretty hard from it. So after this closure, there are two questions, right? Are we first going to go back down to retest this level and then we get the real move? Or are we, for example, just going to previous month high and take it out and maybe even the all-time highs, and maybe from there we want to see a reaction if you are going to trade down? But for now, let's say, okay, we have already seen this imbalance get tapped to. So let's jump down one time frame. That means the weekly. And what do we see? So this is the week that touched that imbalance, right? And we had a week after that, we closed pretty bullish, right? Above the week high. And the closures are really important, okay? There's if you want to understand if we are going to continue in one direction, you want to monitor the closes. So in this case, this weekly closed above that one, right? Above the prior week. So that means that after we close this one, we want to be bullish this week also. And I will teach you also how to, find good opportunities, because once we see a closure like this, for example, and we want to know that, okay, we are going to be bullish this week, that means how do we place ourselves so that we can catch that move? That's when we we go down to one time frame again, and that will be the daily, right? So let's say Wednesday, Thursday, Friday, that was the Friday close, right? This market also, that we don't get confused. So that was the closure of that green week, right? And that means that this week we want to be bullish. So what do we see? We look on the way here. Did we find anything interesting that we can trade from? And the question is yes. We have another imbalance that was created, right? That means that we want to be looking for opportunities right here, right? So let's say Monday opens. You see we go lower. And here's the importance of having higher time frame levels. So because we had this imbalance, we have already framed our idea because of how the week closed above that prior week high. So that means that, okay, we mark this imbalance, we go down to the 1 hour. Me personally, I don't look a lot at the 4 hour, maybe sometimes, but that's for another lecture. So we go down to the 1 hour. And here we want to see what or how the price will react once we come in here, right? So the question we should ask ourselves, number one, the time. What is the time that we came into this imbalance? And is it a time that we possibly could make a low for the day, for the Monday? So let's see. Okay, so market open around up here, right? Let's see a 14 minute there. So that was during Asia session, and for us, I'm basically in Sweden, so that time I'm sleeping. But so during the night we had this Asia big drop, you see, and a lot of people, when they see a drop like this, they think, oh, I missed it, this must be really bearish then, because they see this big red candle with the imbalance and all that, so they can't wait to just price comes back to that imbalance so they can go lower. But the fact is, when we look at the higher time frame, we know that we are bullish. So once we came in here, let's see, that's the true day open right there, or you can call it like the midnight open, right? So we mark it out, and for us, this is not within my session yet. I trade in London and mostly New York, but if we look at the London session, it starts around here, right? You see, we have already left the range, and this is where people, most people get caught, because they think, okay, we have already made the low, right? And we're just going to go up from here. Wrong, because when it comes to Nasdaq, it's really important to have an intermarket relationship divergence, right? So we know that Nasdaq is correlated with ES and YM. So we want to see a divergence somehow in here. So one thing that's important to see, okay, we know that this is the Asia low, and we know we should be looking for entries around this place. So when we were in this price, let's just put this replay on here so that we can see this happening live. And as soon as London opens, I'm looking at, the 5 minute, the structure. How are we right now? And this is pretty bullish. Like, if you are trading this in the Asia session, then yeah, kudos to you. Like, you've already been making money. But we know that the real move won't just happen during Asia. It might happen, but it's really rare that it happens. So what we're looking at is, we wait, okay, we have this low right there, and we're waiting to see a divergence somehow. So this sort of SMT, I will walk through it like another day, but for now, let's play this forward, all right? And you see, this is like the kind of price action that I just don't touch, because I know I need a good divergence on the downside, and I haven't seen it yet. There, let's see. Okay, this happened really fast, so I'm just going to go back a little bit. So you see, now New York has opened, right? So at this time, New York has opened 9:30. You see, we went up directly, and when I see a run like this, and we didn't have any news before that, I know this is going to be manipulation because of how price tends to work. It needs to create some, illusions that we are going to, trap both buyers and sellers in the same way. But here's the thing, when it comes to New York open, I do have my bias already. So that means I'm on the 1 minute when they open, right? And I just want to see a divergence on the downside. So I'm just going to play this a little bit forward until we get that divergence that I want. And there. So the next question becomes, when do I know that I can hop on this trade? And here's one thing that you need to understand. What gives us the most important indication that we have shifted price is actually how we displace above imbalances that were created on the opposite side. So let's say I'm just going to make this blue. So that's the first imbalance that I'm looking at, that I want to see if we displace above it, then that means that I can maybe potentially look for entries to the upside. So we play this forward, and there we know that we are shifted the bias, right? And from there on, we can see, all right, do I get an imbalance created? I don't like to put my entries right on the edge of this inverted imbalance. I like to wait and see if we create some sort of, imbalances on the upside that I can trade from. So here are some rules that I think it's going to be really good for you guys. If you see that we have displaced above an array like this, like an imbalance that was formed, on the left side, that means that any array that we get on the right side should be held within that imbalance, that inverted imbalance. Why? Because if this were supposed to be functioning as resistance, the logical thing would be that it should be working as support, right? So if we get an imbalance on the way up here, that means that we want to see if it's going to be respected or not, right? So here's potential entry. So that we can just mark it out. That's literally one of these entries I would like to take. And we know that we're really bullish. So I would actually be putting my target at least to that high, because I know this will be a real clean run. If you remember from the 1 hour time frame, when we get an imbalance like this, there's not so much traffic that could stop us on the way, right? So that means that I can at least target the beginning of this big imbalance, which is this candle's high. So let's go back to the 1 minute and see how this plays out. And you see what happens here when we stretch this out. So many people, as soon as they get this reaction, or they think that as soon as we get new imbalances, that we could, just trade our stop and that we are going to oblivion, right? To the upside, to all-time highs. But what is more important to see is that how do we react when we come down here? So for me, I wouldn't be too quick to micromanage my trade and try to trade it so early, because when we have 10 a.m. so close to our entry, there's many times that 10 a.m. just tries to go back to the range somehow and just manipulate around early buyers and all that. So for us, we need to have a good stop, right? And you see, from that point on, that's when the real move began. And there goes our TP. Boom. So you see, when you have been making your bias like this, you have a higher time frame level. You need to have a divergence on the downside and a confirmation that we have shifted the bias, the intraday bias, right? And that shift would come from us seeing a displacement above an imbalance that was formed on the left side of this curve. So that this little imbalance right here that we got displaced through, this confirmed to me that we have put in the low of day. Actually, it was already in the Asia session, but for that session, particular session, we have already put our low for that session, and we have our main target to the upside. So this was one example on how to frame your ideas, from top down, and how to find your entries for that particular session. Of course, there are many different type of top-down analysis. Not every trade will be as clear maybe as this one, and every day is not like the other day. So it means that you need to understand how the daily closes are, where we're potentially going, where we might reverse and all that stuff. And of course, I don't want to make this video too long, so I hope this was somewhat helpful for you guys and that you found some value in this. And if there's any questions that you have, anything you want me to elaborate more on, please write that in the comment section and I will come back to you as soon as possible. And with that being said, I hope you guys have a good day and see you guys in the next video.